Finally, money is flowing into crypto again. All altcoins are up, but CRV, the token of Curve Finance, one of the very first decentralized finance protocols, it's up more. Now the question is why? Who's buying here? Who's selling here? Does it make sense to buy CRV now? Let's have a look at the on-chain data, the data most people are not looking at. We are now at $1. We're up 76% in the last month. And while this looks great in isolation, there has been a lot of volatility in Curve Finance. Have a look at this prior pump and subsequent dump. The question is, are we going to go higher from here, or is this just history repeating itself very soon? Now, in general, I always like to look at relative valuations. I'm not a fan of just looking at US dollar prices because there's so much correlation in crypto, right? Currently, things are going up. Everything is going up at the same time. But the final question is always, what's really worth investing in? As in, what gives us the best opportunity? If we take on the risk by buying an individual altcoin, we also want to get more performance compared to, say, just buying Bitcoin and Ethereum. Thus, having relative valuations in mind, I believe, makes a lot of sense. This here is CRV relative to Ethereum. So Curve Finance started on the Ethereum chain. And initially, the token did way worse than Ethereum. Since August of 2022 to August of 2024, Curve Finance underperformed Ethereum by 99%, a complete destruction of capital. But something flipped in August of 2024. What happened over here? Why did Curve Finance suddenly outperform Ethereum by 250% roughly? The reason for the recent rally is the exact same reason why we saw CRV dumping that much prior. And that reason is tokenomics. It's a circulating supply of CRV. CRV used to have a supply of only 226 million tokens, and this grew all the way to 2.3 billion tokens. Now, price is the result of demand and supply. Here we've got the supply over time. If the demand doesn't grow at the same rate, of course the price has to go down long term. But have a look at how the supply schedule shifted since August of 2024. So that's when the core team didn't get any additional allocation anymore. Now it's just emissions that increase the token supply. August of 2024 was that cutoff date, and that's also when CRV was finally able to outperform Ethereum. I'm not going to talk about the past and the drama, how one of the CRV founders took a loan against the tokens, then bought a mansion, then almost got forced liquidated, did some over-the-counter deals to stabilize the price. I'm not going to talk about this because it doesn't have any impact on the future price development. This is all just the past. But here is something that might be relevant. This is the total value locked of Curve Finance over time. It's currently at 2.5 billion. At one point it was at 24 billion. So that's a drop of roughly 90%. CRV was closely involved when UST depegged, when the Terra Luna protocol went bust, which then led to a massive bear market in the subsequent year. Now recently, one might argue that we do see potentially some growth, or that at least the total value locked has stabilized. Still, it's hard to get excited about this adoption curve. Curve Finance started out as a decentralized exchange that was focused on stable coins. So it was stablecoin A versus stablecoin B. So let's say USDC versus USDT. And because there is no price fluctuation between the two assets, between stablecoins, usually, Curve Finance was able to offer very competitive swapping rates. But the competition wasn't sleeping, and so now Curve Finance is very different to what it used to be. Now there's more volatile assets being traded on Curve than stablecoins. Have a look at the number of daily swaps over time. There's really no growth here. This chart starts in 2023. Have a look at the Curve pool volume. So how much capital is there in different liquidity pools? This is a 1-year chart. It peaked roughly 6 months ago and rather tends to decline now. What we've got over here are the Curve fees per week. So how much trading fees does Curve make on the Ethereum chain? It's now listed on several chains, but still Ethereum is the main driver. And then there's always the question around the staking program, because yes, there is the demand because of the usage of the platform. There's also the supply because of token emissions, but then there's potentially also a reduction, at least a temporary reduction in the supply through staking. So whoever stakes a token takes it away from the circulating supply, potentially improving the price development. Now, unfortunately, we do not have positive news here. The locked CRV peaked in August of last year. So yes, Curve Finance was able to outperform Ethereum since then, but I believe that's mainly because of token emissions. It's not because of the staking program. People aren't really that excited about Curve Finance anymore. Understandably so, since the asset crashed by 99%, relatively speaking, in the last years. And so that's the staked curve, and here's the staked curve relative to the total supply. So that gap is further widening. That's then the liquid supply that's floating around. Not necessarily a great development. But that then begs the question, why was the price able to recover like this? Yes, there is less additional CRV hitting the market, but there needs to be also some kind of demand, right? Who's buying Curve Finance now? I think the answer is in short-term leverage, because the centralized exchanges own a lot of CRV and they want to offload that over the long term. But in order to do that, they need to put some attention on the price. In order to do that, you increase volatility, right? Volatility breeds attention. So in the last 24 hours, there was 124 million worth of trading volume on the Binance spot market. But compare this with the perpetual futures. Here we had almost 400 million of trading volume. So the levered bets on the price now really determine where the Curve Finance price is going. Most people that bet on Curve Finance on the perps are actually betting on rising prices. So this is now a positive funding rate. The longs have to pay the shorts in order to further bet on the price appreciating. The open interest spiked massively. So now we've got more than 400 million worth of bets on the Curve Finance price. And just have a look at how the open interest correlates with the CRV price. As there's more and more bets on the price, the CRV price tends to go up. And as the bets deflate, as attention moves to the next token, the price tends to go down. And currently we are at historical heights of open interest on Curve Finance. It really looks like this rally is caused by short-term capital entering the market, because now the shorts get liquidated, the longs make money. And the reason why I say it's short-term capital is because perpetual futures tends to be very much active trading. The slippage is very, very small, but the financing costs are large. So holding a token long-term is expensive. Trading it actively is cheap. And we're also seeing this in an open interest chart like this, right? The money flows in, the money flows out. The money flows in and it flows out again. And currently we are at historical heights. This is potentially a risk for the future development of the Curve Finance price. I don't think CRV is the best token to short, but I also don't think it's the best token to hold long term, simply because the platform isn't growing anymore due to massive competition in decentralized finance. The general problem with crypto as a whole is that there's more and more token emissions. So a lot of projects launch and the founders want to pay themselves, the early investors, the venture capitalists want to pay themselves. Maybe there was also some marketing expenses, so some YouTubers might get an allocation and then sell the token. And the retail investors have to support all of that selling for the prices to stay stable. This here is the weekly token emissions of the entire altcoin market that's tracked on this website, Tokenomics.ai. And it's pretty much above 600 or at least $500 million every single week. If the inflows into crypto are slower than that, then the altcoins have to go down, at least relatively speaking. For example, have a look at this here. This is the DeFi protocol 1inch. So it's a decentralized exchange aggregator. It got a lot of usage in the past. But the problem is that the circulating supply grew massively as well, right? From 100 million to now 1.4 billion. And that then leads to 1inch doing much worse than Bitcoin or Ethereum. This is 1inch relative to Ethereum. Have a look at this. This is Optimism, right? A leading layer 2 scaling solution on top of Ethereum. It started out with 214 million tokens and it's now at 1.6 billion tokens. And that's the long-term chart relative to Ethereum. And so there are several consequences from this, right? We cannot afford to own a lot of different altcoins because the vast majority of altcoins underperforms Bitcoin and Ethereum most of the time because of that token inflation. But also picking a single winner here and there is very hard because, again, most tokens do worse. So it's like picking the needle in a haystack. Some people simply just stick with Bitcoin, Ethereum and Solana then and forget the rest of the altcoin market. But I actually think there's an opportunity here because if we have constant underperformance, we can bet on that. We can bet on the underperformance to continue and make money from that. So instead of getting this performance by buying 1inch, we flip this around. We bet on falling prices of 1inch and bet on rising prices of Ethereum at the same time. So this is the same chart, just flipped. And this is simply using decentralized finance to do exactly that setup. We are betting on Ethereum to outperform 1inch. Same here for optimism, right? Instead of buying optimism, we are just betting on falling prices of optimism relative to Ethereum. So in the last year, that position performed 150% roughly. Now try to make 150% in a year just by plain simply buying an altcoin. It's much easier said than done. Yes, there are some outliers. There is this Aerobot and this DRGN and this SNSY token, but the vast majority of altcoins is just going down. And so instead of trying to find the next Aerobot, I think it's better to just flip this around and everything that's red becomes green and everything that's green becomes red. So then we've got the odds in our favor. We don't try to pick the needle in the haystack. Instead, we bet on the haystack, on the vast majority, to do poorly. And again, there is a fundamental reason for that underperformance, right? It's all of those insiders selling all the time. The venture capitalists, the team, etc. Maybe even the users of the platform that get incentivized in tokens to use the platform. Have a look at the altcoin market cap relative to Bitcoin in the last 3.5 years. It underperformed by 75%. And if you flip that around, we've got an outperformance of almost 300%. So this is now Bitcoin divided by the altcoin market cap. I'm following this strategy already for quite a while. What we see over here is my portfolio performance in the last 4 years roughly relative to had I just dollar cost average into Bitcoin. So the Bitcoin dollar cost averaging is in gray and my portfolio line is that one in black. This is monthly data out of my personal Excel sheet. We're now at month 44. I did this mainly with borrowing in lending platforms like Aave and Venus Finance, but recently I changed to perpetual futures and this is even more productive. I started the test 2.5 months ago with 40K and that turned into 60K, again just in 2.5 months. And so the premium members of this channel asked me, is there maybe a way we can just provide some capital to you and you do those relative valuation trades for us? And so I opened just that. It started 6 days ago, so there's no real sample size yet, but so far it has made 3.5%. I'm happy if we do 10% per month. I don't think we'll make 50% in 2.5 months again. But in general, we are moving in the right direction. And again, it makes a lot of sense, right? Most altcoins do worse than Bitcoin or Ethereum. We don't really have to be that scientific about it. If you want to learn how to become a winner in crypto and how to set up those relative valuation trades, where then the VCs and the insiders don't dump on you, but you're actually making money when they are dumping, then feel free to check out all of those tutorial videos, right? There's more than 100 tutorial videos in premium. I'm of course sharing my own trades as well, and then you can simply copy trade and take advantage of those trades as well. There are many opportunities out there, so feel free to check out the community as well. And so if you're an active trader, you can simply sign up for the monthly membership. It's $125 per month. You can watch all the tutorials, you can copy trade me as well. And once you're joining, I will also share my favorite trade. And if that favorite trade doesn't make you money in the first month, I will refund you 100% of that membership fee. So really, you don't really have a risk of joining here. You're either making your money back or it's for free for you. If you are not an active trader though, and you simply just want to allocate capital, you've got more capital than time, then you can sign up for the annual membership. Here you also get 2 months for free, so $250. And with the annual membership, you also get access to the automated copy trading feature, where you can simply just send money to Hyperliquid. So that's the platform that I'm using. And you get the exact same trading performance that I'm getting as well. If it's your first time here, feel free to subscribe. I publish videos regularly. A like would be very much appreciated as well. It helps the channel grow. See you next time on YouTube or see you in premium. Cheers.